Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily NVIDIA report for Thursday, April 25th, 2024. Let's take a look at the charts. I'm going to start with the daily chart here. It does actually show the bigger picture. I always like to start with the big picture and work my way into the day itself. The big picture typically rules the market, if you will. It is the longer term trend, the undercurrents of the market, I think, that move it, and you can't ignore it. Trend is your friend. All those cliches apply to the longer term outlook. And so we did close last Friday below the 823.19 formation. I mentioned had we closed, or if we close above it, it is a sign of strength, at least near term, but we've yet to really close above it. I can't remember if we did on Tuesday by a hair, but I also mentioned that if we did, it was by such a minor degree that you couldn't consider it to be a reliable show of strength. Now, we gapped higher, obviously, on Wednesday, then we fell back and closed clearly below 823.19. Now you can see in the far right 823.19 weekly resistance. I am now combining it with the descending channel top that is right here at 838.55. This is a range, a narrowing range over the next few days. They actually converge. I think on Monday they converge entirely. 823.19 to 838.55 is an area that can contain buying still through next week, and below which we do maintain a 2 to 3 week sell signal into this zone. I mean, 691.53, you can't really call it part of it, but it is essentially part of it. 665.40 is this long-term double channel extension that we played out following the settlement above this channel structure almost a year ago. And it held on the way down. I'm calling it a target. I don't consider this to be incredibly buyable support, but it is an objective. What I do think is buyable support, in other words, I'm comfortable buying into the 643.24 region, and I'll call that a 2 to 3 week target below the channel bottom that on the weekly chart is at 828.96, but on the daily chart, as I show here, 823.19. So, it really is this lower zone here, 643.24. The mid 640s, mid 660s remain a 2 to 3 week target. Let's work down today and just show you that we do have a 5/8 Fibonacci over the last 4 days at 788.44. Holding below 823.19, we'll keep 788.44 in reach. And it is a downward pivot point. If we break 788.44, we just might test 742.20 today. Given the recent volatility, I wouldn't be surprised. I mean, that would be an extreme move, but it is possible. So if we break 788.44, the 742.20 level, which is this pullback low here, it also correlates well with these highs that preceded it a couple of weeks earlier. And I think that's enough to contain daily selling pressures. I don't consider this to be a magical level. I don't think it should be bought for more than a day, like on an intraday basis. I don't think it should be held overnight. It's certainly not a 3 to 5 day swing trade. I do think that continued daily settlements below 823.19 should yield the mid 660s to mid 640s over the next 2 to 3 weeks. And certainly if we did close any day below 742.20, then we should see our target within just another 3 to 5 days. So closing below 742.20 should yield 643.24 to 665.62 within another 3 to 5 days, where we could actually bottom out on a weekly, possibly monthly basis. I can't help but ignore the visuals here, this hyperbolic kind of church steeple rally. They often have a knack to give much of it back. And much of it could be all the way back to 405.67. Now, I'm not about to say that I'm hinting that that's what we're expecting. But, this could be very stair-step. We could bounce at 643.24 back into the 820s, let's say, or whatever we find resistance at the time, and then fall away again. We could unwind to 405.67. That wouldn't surprise me, actually, given the hyperbolic move we've seen over the last few months. But if we close above 823.19 today, and I do need to lop in 838.55. If we close above both of these structures today, we do actually have a 3 to 5 day rally. Maybe just a day or two rally to 900.39. And 900.39 is our upward pivot point. as we move through May. So this is the point that if settled above 900.39, anything I just said about, church steeple, hyperbolic rally, and the tendency to give much of it back into the low 400 area, blah, 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 none of that will play out. It would be a settlement above 900.39 that would set off a long-term buy signal. By long-term, I mean through May into June, before I would anticipate seeing a testing of long-term resistance that I haven't even illustrated yet. But 900.39 is our upward pivot point through May. And until then, our resistance ends at 838.55 and begins at 823.19. So we are heavy into May below this area. And then we are bullish through May and into June above 900.39. It's about as simple as that. This should have an up pivot point. We don't have that. But down pivot, 823.19. We're below it. We pushed above it on Tuesday, but we didn't close above it. That's the down pivot. The up pivot is 900.39. I think I've said it all. I don't think there's anything else that needs to be said. I'm going to leave it at that for Thursday's NVIDIA report. Please click like, share, subscribe. Check out wickedstocks.com for that Apple analysis, daily triple Q, daily SPY, so forth and so on. I'll be back tomorrow with Friday's NVIDIA, and you have a great day.